Okay, welcome to our second backtesting session. So these backtesting sessions, just to break it down for you guys, this is your opportunity to actually understand and learn and get some reps in on how I actually mark up the charts and what I'm thinking as I'm doing it live in real time. This back play with TradingView, if you have TradingView purchased, you're able to go back into the market in the past and play it live, right? For example, I went back to USDCAD, the US dollar to Canadian dollar. Went back to November 15th. So what I do with this is I pick a random pair and I pick a random point of time and I literally just trade live, right? So that you guys can actually see me do it in real time, break it down live, talk about what I'm thinking in my head, right? And as I do these, I'm not going to be so focused on actually breaking down, teaching, and educating as much, but more so just allowing you guys to sort of like sit next to me or sit behind me and watch me do what I'm doing live. And the only things you're gonna hear me say are the things that I'll be saying to myself in my own head. So I'm gonna be quiet half the time unless I'm just thinking out loud. So any commentary that I do is just me thinking out loud. All right. So with that being said, I'll jump straight into it. And keep in mind, guys, maybe you want to have a notebook out, or I don't know, maybe if you want, even throw on some music while you're watching me do this. These sessions are usually in between 20-30 minutes, probably closer to 30 minutes, but it's just me kind of just moving around and putting to work everything that I'm teaching you guys from just being a part of this. So I have three things here. At the top left, I have our motion that we go through: trade analysis, trade execution, trade management. And on right next to that, I have my entry criteria, which basically what I look for is manipulation and then distribution, accumulation, manipulation, distribution, which is the most important part is having manipulation before we actually look to take a trade. And on the right side here, I'm going to be tracking my win loss record. I copied and pasted this from a different backtesting session. We have a win loss record where we're 0-0, and then wins, I have something here called RRP, which is basically your risk to reward points. Everybody should have a clearly defined RRP, right? It's just this is a term that I made up myself. Risk to reward points are basically what is the equivalent of basically what you're risking. If you're risking $100, your RRP is 100. So if you lose 1 point, you lost $100. If you gain 5 points, you gain $500. So what's your RRP? That would be 100, for example. In this case, if I take a 1 to 5 trade, I gain 5 points. But if I lose 1 point. I always only lose 1 point. And this only works if you're having consistent risk management. That's why it's important to make sure that you're risking the same amount per trade whenever you trade. The last thing is I'm actually gonna take this. Let's see if I can put this on the screen. Paste. So these are our candlestick confirmations. Whenever I look to get into a trade, I always enter right after I get one of these confirmations. But the best time to use these confirmations is after you see some form of manipulation. And we will put that right up there. So let's go. So UCAD on the 15-minute time frame. The first thing I notice is we do have our trend line here that's to be broken. Once this is broken, I'll look for some sort of pullback motion and then to take the trade back up. So we'll see if we can get something like that. So look at that. That trade's broken out. So now that this is broken, we have two options. One, I have this breaker block, which we see that market, this is the last high here, right? So I take the top and bottom of that candle, drag it across. And this is a breaker block because it did break structure. We did see structure break. And if I don't get a reaction there, I look for a reaction down here at the extreme. Okay. So what I do is this. Once price gets to down to that M15 zone, what I'm going to do is I'm going to wait for confirmation on the 5-minute time frame. Okay. Okay, so look at that. We got a very nice bullish engulfing here right off of that zone. And these cancel confirmations, I'm going to mark them with the yellow box all the time. Now, in order for me to take a trade, what I need to see is some sort of manipulation. If manipulation has occurred, then we can take a trade. But if there's no manipulation, then I'm just going to pass up. And understand that trading like this, you are going to miss out on opportunities sometimes. There are going to be some opportunities in the market that don't manipulate at all, and they take off immediately on the first confirmation, right? But what's important to note is that if you're trading like this, you're definitely going to be able to have a higher accuracy, and you're going to avoid many more losses because you're waiting for the manipulation that basically has to occur in the market for you to even trade. Okay, so looking at this right now, what I see is this. The reason why this entry confirmation is valid to me, aside from the fact that it's a bullish engulfing, what I see is that the market cleared these last lows. And the only reason why these lows are considered as a form of manipulation anyways is because this high here, this impulse here, actually broke structure. And because this impulse broke structure, this tells me that this was an area where traders were actually getting into the market believing it was going up because this impulse broke structure right before this zone here, and then it came down and it cleared it. And now what's important to note about this clear is the candles didn't, I didn't get 2 candles closed below this low. It swept it, right? So this was a sweep. When price sweeps, that's the market collecting liquidity. So I had 1 candle closed below, but the next candle closed right back inside. So this is my manipulation. Okay, you want to see the process of accumulation. Then you have manipulation. And then now what I expect is distribution. However the market wants to present it. Okay. Profit. All right. So let's talk about trade management. If I'm managing this trade, which means that I'm trying to specify when's the best time to get out, I have a couple of options. One, the market moves in levels. I can set a TP at any of these levels coming up. Okay. I'm using highs. Two, I can hold this trade until the momentum dies. This is what I like to do 95% of the time. I'll use my indicator at the bottom. I'll use my AO, and I'll stay in the trade until the momentum dies. All right. So at this point, we are getting those red bars that tell us that perhaps we should be exiting. However, we're going to stay in this trade for 2 reasons. One, I'm not up my minimum target, which is at least 1 to 2.5. I'm only up 1 to 1. So I'm definitely going to hold and let the market decide and see what it wants to do. And two, with that being the main reason, I want to see structure break going forward, right? And I can also see that I am respecting this level here which with inside of the zone, there's an area of demand, and the market can be using that to propel itself forward more, which it did. All right. So keeping track of this trade, what I would now do is if I wanted to exit is minimize that. I want to wait until the market gives us, whoa, look at that deep profit. So now at this point, I'm going to drop down to the 3 minute time frame because I want to exit sooner rather than later. I mean, if I'm this much in profit, I don't want to wait for exit confirmation on the 5 minute time frame. I'm going to want an earlier one. I'm going to want an earlier one on perhaps the 3 minute time frame so that I can exit as soon as the momentum starts to change. So you have a random bearish candle like that. You would not be wrong to close here because you don't know what's going to happen next. Although I think that the market is probably going to continue to go up because when you have this many bullish candles and then all of a sudden you have a bearish candle, it's usually just a pullback, right? So, but let's just say that, for the sake of consistency, we are up our target, which is at least 1 to 2.5. I'm going to close this here, and this is a 1 to 4.3. So that makes us 1-0. And our first win, we are taking home 4.3 points. And let's just see what happens with this. Most of the time, you don't want to chance it, especially if you're already up your goal. There's really no reason to chance it if you're already up your goal. You never know what's going to happen next in these streets. Never know what's going to happen next in these streets, man, these markets. So now we're here, right? The market made its move. We caught that move. We got out there. We want to see what the market's next move is most likely to be. Now, let's get rid of this stuff. What I see is this: a breaker block is right here. So a breaker block is, as explained in chapter 5 already, it's when you have a demand zone, right? Because you have this block here, supply zone in this case. It breaks structure, comes back, it gets no respect, it gets ran through, price pulls back, you look for your confirmation entry within that zone, then you take your trade. So the next thing I'd be waiting for is for that zone to get hit potentially, which did not happen. So because I got no confirmation there, I'm gonna mark my next supply demand zone, which right here again, you always mark these by looking at the peak candle of a particular impulse. In this case, I'm marking this candle here. Now, there's a reason why I'm not going wick to wick. In this case, I'm just gonna take the wick area of this candle because this wick area is the push down and a push up. For example, if I drop down to the 5 minute time frame, let's go lower. Let's go even lower. Oops. So what happened just now is I just went a little too far down in time frame and it didn't load the data. So I'm going to try to be really quick. I'm going to go back to where I was in the market and just reset it to where I was at. I think I was I can't really see that well, but I must have been somewhere here. I'm trying to stay zoomed out so that you guys can see that I'm not actually trying to understand and see what's gonna happen. All right, so we're back. Let's catch back up to where we were. Okay. Here we are. So we have a new demand zone. I'm waiting for the market to come back to that zone and potentially give us another entry. And here we are. So once the market gets down here, I want to wait for my manipulation before I look for an entry signal to actually take a trade. All right. And just for the record, I'm going to mark this as well. This breaker block right here. I'm just going to mark this because I can see something happening here when the market comes back. Again, we have a demand zone. It gets ran through. It becomes a breaker block because price broke through it. I'm just going to let that sit there. Okay. Now we're down here. What I want to see is I want to see the market come down to this zone and then manipulate. And if you're wondering, no, this is not manipulation. I'm not going to consider this as manipulation, this last low here, because again, I would need to see that break structure. I would need to see that break structure for me to consider those lows being cleared as manipulation. There's no structure being broken. The next piece of structure to break is way up here. That did not happen. So I have yet to get my first entry signal. I have yet to get my first confirmation that I feel like can be considered as manipulation. There was this. This could have been a confirmation. However, there's just so much zone left. I'm not sure if I would have taken it, but let's just consider it as manipulation having had occurred because this is potentially an entry signal that other traders might have executed and taken a trade based off of. Now this is an entry signal. This is a very strong where is it? Morning star pattern, right? Very strong morning star pattern where we have a bearish candle followed by a doji followed by a bullish engulfing, right? An engulfing candle that engulfs the last bearish candle that was there before. Okay, so this is where I'd be getting in. Right when that candle closes, stop loss goes below the low, half a pip below the low, and we sit in our trade. And this would be my first attempt at looking to catch this move. And I say first attempt because sometimes it can take 2 attempts, sometimes even 3. So never think that your first entry is going to be the Hail Mary, the entry that actually wins and runs to take profit. You got to have an open mind, and you cannot have those expectations because expectations lead to over leveraging and over risking and other trading errors. Okay, right there. Let's stop. So this trade literally got stopped out. And we'll put that on the board. 1 and 1. So now our total net profit is 3.3. Right? Because again, if we're losing a trade, we only lose 1 point. However, when we win much more. So this is the first loss. We got stopped. But we're still in this zone. We're still in this area of interest. So what we're going to do is we're going to wait for another entry confirmation before we take our trade. This is not it. This is not it. This is suspicious. This is a doji, which means indecision. Okay, this is a bullish engulfing candle, so we'll take that. However, because our low has to be below the low, below the pivot, and this stop loss is too wide, what I would do, being that this is a 20 pip stop loss, that's actually insane. I would wait until the market pulls back to that last wick area right here to fill in this gap, this imbalance, and this would be my entry. If the market pulls back to this point, this would be my entry. So we got in. Okay, freeze, freeze. All right. So that's the second loss. We tried to get in again off of this move. That was the second loss. Now I see this bullish engulfing. This is going to be our third confirmation right here, bullish engulfing. So this is another entry confirmation, and this is after we've gotten manipulated. So that makes this a decent entry to take. Now, when it comes down to managing your trade management. Okay, let's freeze. So that's exactly what I wanted to see. What I wanted to see is these first highs get broken. Once those first highs get broken, you can now call this a winning trade. And so when you're managing winning trades, there's only a couple things to know. So you have two ways to get out of this trade. Way number one is this, right? And keep in mind, you would want to leave a trade within at least 1 to 2. Within at least 1 to 2, 2.5. You want to get at least that before you leave a trade, or at least those are my minimum requirements. It's quite conservative. I recommend having something just as conservative as that. You want to know that the market moves in levels. So there's a couple ways this can go. The market can turn around right now, right? It's already at this level here. The market can turn around right now and go back to entry and go back to stop loss. However, because if I were to exit right now, I'd only be at 1 to 1.7. I wouldn't do it. I mean, if you're extremely conservative and you wanted at least that 1 to 2, you just wanted that bare minimum to go and get out, you could have taken that, right? The next one would be here, right? This is the next level in the market, or pivot point, right? The market moves in levels. This is a 1 to 3.7, right? So you would be looking to get 3.7 points off of this. And if you really wanted to go long, you take your profit up here, or at this breaker block zone here. Maybe at this breaker block, or even at this level if you're going beyond that. Okay, but me, what I like to do best is I just like to exit using momentum. I want to watch my momentum indicators and see what the momentum looks like, and exit based off of how that goes. All right, so look at that. We got to pay attention. So this second level was hit, and you really do got to pay attention, because when the market reaches these levels, it can reverse. And because you have that potential to reverse, you want to make sure that you be exiting sooner rather than later. So me being this deep in profit, right, which is 1 to 1.3.7, I'd drop down to the 3-minute time frame, and I'd be looking to get out at the next confirmation to exit and get out of here. In this case, I see I have a red bar. However, this candle is still bullish, and I can see that it's pretty much reacting off of this high right here, potentially. Okay. Next candle, another red bar, but I see some wick rejection here at the bottom of this candle, which means price traveled down there and came back up. So I'd hold again for the next candle. And at this point, because this is a bearish candle and I do see that there were more and I do see that there's rejection off of this level here, because I'm wary of that, and although price can come down to this line in reverse because of the structure here, it doesn't have to. And I'm already up 1 to 3, which is above my minimum. So should I risk it? Should I chance it? And should I try and hold this trade to try and potentially get here or maybe get here? Or should I take my win, 3 points, add it to the score, then I'll be up 7 points and move on to my next trade? The best decision in that scenario would be to just, I mean, you got your goal, you should get out. You got your goal, the market is showing signs of reversal at an area where it can reverse, which is at a high and low. You should just take it and close it. So at this point, I'd take my profits, I close that trade. So this gives me 1 to 3, 1 to 3.2. So we will say 3.2. Okay. Win number 2, I'm sorry, this was 4.3. So win number 1 was 4.3. Win number 2 is 3.2. We exited there. Let's see what happens. Let me see what my next opportunity would be. So yeah, I mean, unless the market comes up to this block here, or until it comes up to that block here, I can actually still look to buy this market up. But because it's coming down from an area of resistance, I am gonna need confirmation before I decide to keep going. That's either gonna happen here, or maybe it'll come back down to the extreme at the bottom here. But whatever happens, I want to see a confirmation, candlestick confirmation, before I actually try and trade it back up. No reaction here. Okay, look at this. So I'm gonna take this. It's a little. It's just. It's a little fishy, because if we're looking at this right, I want to call this a bullish engulfing, except that the engulfing candle is broken down into 2 candles, or maybe even a morning star, except that the middle candle isn't really lined up. I mean, it's a fishy confirmation. It's in between. It's very much in the middle. But let me just see what it looks like on the. Yeah, I'm gonna take this. I'll take this. Loser. Look at what happened right after that loss, though. And we're still in this area of interest. Swept the lows, still in an area of interest. I guess we have to add that third loss there. And I'd take this. Not only is this a bullish engulfing, well, it's not really bullish engulfing, but it's a morning star. Bearish candle, doji, bullish candle. And this is even better because we had this first entry signal be manipulated, which possibly leaves more liquidity in the market to take it up to the point that we want to hold it up for. But let's see what happens. You never know what's going to happen. We just have to see. Your job is to simply just execute based off your analysis and stay consistent with your risk management and always follow your rules. Bad move. So that gives us another loss. However, we're still in profit, right? Right now we're up 4, 5, 6, 7, 7.5 points. We lost 4 points, but we're still in profit. Going back to the 15-minute time frame to look for new opportunities. Wait a minute. This zone is still valid. We'll call this an inside bar. Inside bar is when you have a bearish candle, and then right at the bottom of that candle, it immediately turns around and gives you a green candle. The wicks on the bottom are extremely short. They're very short to non-existent. In this case, those candle wicks on the bottom are completely non-existent, which means price came here and immediately turned around. And then right after that, we get a bullish engulfing. That's a very good sign. So because I'm still in this zone here, and because it's still valid, which it is valid unless you have candlesticks that break through it, 2 or more, this is a trade I'm going to risk again on. And look at that. There's the move we were looking for. So like I said, it might not be the first try. It might not even be the second. In this case, we took 2 losses. We lost this first one and we lost the second one. And this is why you like to wait for manipulation. Right? I sort of didn't wait for manipulation here. Did I? Yeah, it sort of didn't. I'm not sure, but you want to wait for that first entry signal to be swept before you look to take and enter into any trades. Anyways, we're in this trade. Back to trade management. Looking at my levels in the market, I just I would just pay some attention to this because this is sort of like a mini supply zone. This is like it's like a small order block, small supply zone. I'll pay attention to that and see if the momentum starts to die around there. And we also have these highs here. Right, we have this high. See what the market might want to do around there. And also, it is worth noting that this is still here. The market may potentially want to come back up here, but I don't know how that's gonna happen. Like in this case, you could have thought that it was gonna go up there now, but it didn't. So you would have held because you thought it was gonna come here, and you would have lost all your profits. But maybe it's time for the market to go there now. We just have to see. So it's starting to reverse. Let's see. On this candle, we got a red bar. At that point, we were up 1 to 2.5. The question is, would I had closed It's hard to say. I mean, 2.5 is literally the bare bone minimum that I would want to take and leave a trade with. However, there's a lot of upside potential, and I was manipulated twice to get this trade, which means there's probably a more decent amount of liquidity in this trade because I got it manipulated twice, and for that reason, I'm gonna hold. If I was up 3.5, I would have closed, but 2.5, the bare bone minimum. I mean, there are times where I would definitely close here, but because I got manipulated twice, and there's extra liquidity and there's all that space above, I'm gonna wait. And I think that the market would continue its way back up either here, order block. Order blocks are basically just inner levels of supply and demand. Or maybe it'll make its move off of this. Right? I would just look for the market to potentially do something off of those areas. There's also a breaker block here. This is a breaker block because we can see that, and I like this a lot. Okay, my microphone died. I hope you guys can still hear me. We should be good. Okay, so yeah, what I'm looking to see is price come back down to this breaker block and possibly continue moving up from there, or this area of resistance there, and we'll see what happens. Okay, freeze. Go a little slower. Whoa. Okay. Let's talk about this. So this got violated. The supply zone got violated. Well, let me just play one more candle. Okay, okay. So we're back at the base here. This is not essentially bad because this is the first impulse and the first pullback. Maybe it wanted to come back down to the base of this move and pick up some more change. It doesn't look bad. That might be the case here. So honestly, I'd be holding this trade for either it's gonna be a win or a loss. Okay, it was a loss. Let's throw that in. See, sometimes you want to take the 2.5. Let's look for our next opportunity. We're still in profit, by the way. Min zone down here. See what the market wants to do on it. So this zone is over 24 hours away. So we're gonna make that H1 zone, which means I want to see a 15-minute break of structure for me to have a 15-minute zone for me to actually trade on. I'd want to see this get broken. I need 2 candles to close beyond it for me to consider it as a break. Okay, that I can consider as a break. All right, okay. We have new opportunities. So I'm just gonna get rid of this stuff here. So one, we can continue to take this up. 2, we can trade it back down. There is a breaker block right here. There's also the supply and demand at top here. And if the market ends up breaking this trend line, breaking up above this, and we have those as well, we would definitely look to take this up to the upside. If the market breaks this trend line, we're definitely gonna have an opportunity to get in for a buy. And I'm gonna ignore this one here. I'm gonna ignore that one. I'm gonna say the market's gonna make a move here. Technically, it broke this trend line already, so I'm gonna look for a move here. And if the market just so happens to come back down this low, down here at the extreme, 5-minute time frame. Okay. For some reason, I feel like this might be a bit of a tricky one, but let's see what we got. All right, so I know I broke the trend line. However, the market literally just came to these areas of supply, and it did not break any. It didn't break anything yet. It didn't break any structure yet. So I can't say that this is really an uptrend yet, because I would need to see at least this structure here get broken, which hasn't happened. So what I'm gonna do is this. I'm gonna consider us as still in a downtrend. Because we're still in the downtrend, this breaker block is still a thing, but it's just too bunched up. I really want to see the market make its way back up, and I think it is. But at the same time, you just have to wait and see what the market wants to give you. All right, so what I'm looking at is all of this. This is actually a little bit too bunched up and messy, and I'm gonna pass. I'm not even gonna trade this zone. I'm gonna pass up on it completely. Okay, freeze. Now we might have something. The market's gonna do one of two things here. It's either gonna shatter right through this zone, or it's gonna give us an entry. So here's our first signal here. However, I don't trade those first entry signals. I wait until that first entry signal is broken, and then I'll look for something. Yeah, he wants to move, but I'm just gonna be a little more patient. All right, at this point, I could say that this trend line is broken. And so whenever a trend line is broken, you can wait for your pullback and take the trade on the way back up. In this case, we have this leg here that started from this point. This is our origin, this is our supply and demand. This would be our first potential entry. The only thing I'd want to see is the only thing I'd want to see now is our entry signal, which if this is a doji, we can take it. But let me just double check. Yeah, look how that looks. All I did was drop down one more minute on the time frame just to see what this looks like. And yeah, that looks like a good candle there. There's a bullish engulfing. Let's see what this trade got. Let's see if it wants to go up to that zone or not. Okay, okay. Market definitely wanted to go that way. All right. Two options. I can close right now because I am at the last high. And these highs are areas of interest or points in the market where the market could reverse. And if I close right now, I'd be leaving with 3.3 risk to reward points. So there's literally no downside to that. However, because this is a doji candle right here and it's not a rejection candle, I just want to see what this next candle is going to look like, and I'm okay with losing just a tiny bit of profit if it's a bearish candle. Okay, that's a different situation. I was okay with losing a tiny bit of profit, but this is quite the drop. So now I'm back down to a 1 to 2. So here's the thing: if you're getting huge bullish candles like this, and then all of a sudden you get one sharp spike down, bearish candle like that, a lot of the times you're pretty much still good. However, if you were trying to play it super safe, you would still close this because you at least have 1 to 2 to take. But in this case, I'll hold. And the reason I decided to hold is because I seen that the market was just at this inside area of demand. And I just wanted to see how it would react here before closing. And it looks like that was a good call. Now, the next thing I want to see is the market break these highs. I want to see the market break this high. And then I'll definitely be looking to close as soon as possible. So now look where we're at. We actually made it back up to this breaker block from the beginning, right? Where we said that the market can come back to and then sell. However, this breaker block is on the H1 and the market can run right through it. And we cannot trade this breaker block until we have a 15-minute breaker structure. So I'm just going to watch and see. I'm going to go down to the 3-minute time frame, and I would exit at the next rejection of momentum, and it looks like we already got one there on the 3-minute. And there's a bearish candle followed by that. So for that reason, there's no reason to risk it. That's pretty much 1 to 4 right there. I'd close right here and take my profits. So our third win was at 3.8. Good. I wish we took that 2. I wish we took that 2 points from earlier because we would have had extra 2 points to move with. Where was that trade anyways? I think that was, I'm not sure where it was. I guess you guys can rewind and see where I got that 1 to 2 from that I should have took, but I didn't take. But I'm gonna go up to the 15-minute time frame, because in order for me to sell the market here, I have to see the market drop down and break structure on the M15, which wouldn't happen until this is broke. So until this is broken, I'm still bullish, and I want to see the market possibly come back to certain levels before uh, buying again, like down there. Look at that, nice touch. Whoa, go back a little bit. Okay, so price came back down to this 15-minute demand. Now what I want to see is, usually if the market pulls back to the base of this zone within 4 hours, I don't wait for manipulation. I'll take the first confirmation. However, something about this trade is throwing me off slightly, but I'm prepared to take a loss in order to catch the move here using proper risk management. So my entry would have been right after that bullish engulfing, and I'd be in this trade. First take profit area. Second take profit area. Look at that. Good. Oh, there's the manipulation. This is why you wait for manipulation, guys. But let's see if we get another confirmation. I could call this an inside bar. I can call this inside bar right there. Let's have a look. That inside bar, we get the bearish candle, and then the green candle is somewhere up there from the bottom. And we don't have long wicks. We have one long wick on the white one, but that's okay if there's no wick on the blue one and then the following candle. So is that number 5 or 6? I don't know. Let's just say that was 6 and just be safe. I don't want to cheat. Let's see what this does. I gotta check the time on this. Let's see. Oh, okay. This is a time where I never would have even bothered to place a trade. This is the US dollar to the Canadian dollar. This is something that should only be traded during New York session, maybe London sometimes. This trade was at 1 p.m. in the afternoon, throughout the day, 5 p.m., 6, 7 p.m., 8. Yeah, sorry. I would have never took this trade. You don't want to trade a pair outside of its session like that. So this wouldn't have even been in consideration. However, I am going to mark it up just to see the market play off of these zones. See if it plays off these zones or not. Just double check something. Yeah. As you can see, the 3 wins that we have here. Oh, we have a third win. Right, let me write that down. As you can see, the 3 wins that we have here only take place in New York session or the London session. This first one here was at 4 a.m. This next one was at 10 a.m. This one here was at 9 a.m. And I guess we'll just wait until the market comes back around to London session, which is not going to be until another few candles or so. London's going to start right here. Okay. Now at this point, what do we have? Break of trend. And I'll make this the last one. Break of trend, market pulls back to a supply and demand. Market takes off, it's making its move. I have an opportunity to get in as the market comes back. Because we have a new demand zone from this impulse here. And this is my way to get back in. All I want to see is a simple confirmation if the market goes down to that zone. All right, there was no confirmation, so there's no trade here. So there's nothing to worry about. No confirmation, no trade. The market is, however, back in that M15 zone that was there already. And not only that, it also came with some manipulation. Right? Because we see that these were this was a surging move that came from this area or right near it that broke structure. And that makes this a manipulated powered move. Let me go down to the 5-minute time frame. So the 5-minute time frame is where we will look for our entry criteria now. And look at this, we have a beautiful bullish pin bar. And I'll take my trade right after that candle closed, that bullish pin bar. And we would go look for take profit areas. You're looking at this as our first one. And goes up here for the second, here for the third. I'm just taking these high levels in the market. Or if I get up 1 to 2.5 or more, I'll just take the next time the momentum flips. Look at that. Yes, this is a winner. This is a winner. All right, so managing this trade. Right now, I'm up my target. I'm up my goal. And let's just say it's the end of the week and I want to make sure that I have a good week. I'm up my goal, 3.63. The next time this market changes momentum, I'm going to be getting out, even if it's before that take profit line is hit, because I don't want to lose any of the profits that I made. I mean, if anything, I could close right now, absolutely right now, because I'm up 2.8 and I just got a bearish candle and I don't know what's going to happen next. And here's the thing. I could use my trade management skills and talk about holding, but the next area where the market is likely to reject anything would be here. And if it goes down to there, I'm back down below 2.5, 3 points. I don't want to be back down below 2.5 points, because then it's gonna make me want to hold. And then what if the market comes down to this bottom area and doesn't decide to change there? Then I just go break even. So in that case, I'd close out right here and I'd take that 2.8. 4 equals 2.8. And so let's go ahead and sum this up. And we get a total net profit. So 4.3 plus 3.2 plus 3.8 plus 2.8. So in total, that's 14 points profit, minus 6. gives us a net profit of 8. So if I risked $1,000, I would have made $8,000 within a span of 5 days. This is all 1 week here, too, by the way. This is all 1 week. So within this week, you would have left this week with 8 points. And that's actually really, really good. Because if you do 8 points a week, 8 plus 8, 16, 6 plus 16 is 32. That's 32 points in a month, right? If you're risking 0.5%, well, you guys aren't talking about risking 0.5% unless you're trading with a prop firm. If you're risking 1%, that's 30% gains, right? If you're risking 2%, that's 60% gains. This is really good trading, right? 8 points profit in a week. That's really, really good. Now, I want to see how this plays out. Oh, look at that. See, look at that. This is exactly why you don't want to be greedy. If you decided to hold this trade to here, you would have went right through it. If you even decided to hold it here, that would have went right through. So a lot of times, if you're up your mini target, you should take it. You should take it so that you can stay profitable. Now imagine if I had taken that other trade where I would have been able to get those extra 2 points. I would have had a net of 10 points for the week. 10 points for the week profit is great. Like that's amazing. If someone could do 5 points a week, that's gold, right? If you have a strategy that can give you 5 points a week consistently, even 3 to 5 points a week consistently, that's really good compared to what everyone else is doing, because most people aren't profitable in the market at all. And as you can see, we can take our losses. We had 6 losses, but we only had 3 wins. Even though we had less wins than losses, we were definitely in profit because we had consistent risk management, proper risk management. This only works if you're risking the same amount per trade. Let's say I had this last trade here, it looked the best, and I wanted to go all in on it, and I risked double or triple. That would have threw this whole thing off. I wouldn't be net 8 points anymore. You know what I mean? And let's say I didn't expect this trade to win, so I risked less. Stuff like that happens. So always entering the market with consistent risk management, that's going to be one of the best things you can do. I'm going to end this right here on this screen so you guys can see what exactly we did just now. And let's see, just move this there. Okay, and that pretty much wraps it up for this session.